I have a six-figure investment portfolio now at 25, but if that all disappeared tomorrow, this is exactly how I would invest my first $1,000. The first thing I would do is put 60% of that, so $600, into VFB. VFB is an ETF that tracks the S&P 500, which is the 500 biggest companies in the United States. So when you buy this ETF, you're buying a little piece of every single one of those companies. The next thing I would do is I would put 30% or $300 into QQQM. QQQM is an ETF that tracks the NASDAQ 100, which is the top 100 companies in the tech sector. And with my last $100 or 10%, I would put this into individual stocks that I know and love. For example, I use Amazon Prime, I use Google all the time, I use Facebook and Meta. So I've bought individual stock of all of those companies, and let's just say they have outgrown my ETFs by a lot. That's exactly how I would invest my first $1,000.
Do you have $1,000 and no idea where to start? You're not alone. And the good news is you don't need to be a Wall Street expert to make smart money moves. In this video, we're breaking down exactly how to invest $1,000 the right way. Let's listen to the real people who have done it and let's learn from them.
If I had $1,000 that I wanted to invest right now and I wanted it to frickin' grow, I didn't want to gamble with it though, I didn't want to lose money, this is exactly what I would do. And who am I to talk about this? I went from $40,000 in debt to millionaire at 30, and now I teach you guys how to get rich too. So basically I would use something called the 3-fund portfolio, and it gives you full diversified access to the global markets without needing to be a finance bro. So part 1 of the 3-fund portfolio is a total market US index. The second would be an international stock index. And depending on your age, the third one would be a bond index. This strategy was made super popular by a man named Jack Bogle, and he was actually the creator of Vanguard, and now it's called the Boglehead approach to investing. And wealthy people use it because it's proven. They're not out here trying to guess the next hot stock. They're not looking for the needle in the haystack. They're buying the whole haystack, and they want something that grows long term, that's proven with less risk. Because making money is great, but not losing it is even better. And 96% of stock pickers don't make money. When I say the total US market, basically I mean all types of companies. I know a lot of people will say just to invest in the S&P 500, but those are only large cap, think like Google and Amazon. You are then missing mid-sized companies. Those are companies that are growing fast, think of them like the rising stars. And then you're also missing small cap companies, and those can be riskier, but sometimes they grow the fastest, aka you make more money. You want all of them in your portfolio because sometimes the underdogs like the small caps make more money than the big companies do. A total market fund like the one that I'm explaining gives you all three. Now you want international exposure because growth isn't just happening in America. Europe, Asia, emerging markets, they all bring different opportunities. And actually Vanguard's predictions show that international could outperform the US, meaning it could make more money over the next 10 years. So you don't want to miss that potential upside. And then you have bonds. These are referred to as fixed income. And the older you are or the closer to retirement you are, the more of these you typically want in your portfolio. Now an optional bonus, you know your girl loves passive income. So if it was me, I would probably add 10% of my portfolio into a high dividend paying ETF and a real estate investment trust. Those are investments that pay you regularly just for owning them. And why do you keep it under 10%? Because those are income plays, but what you want your focus to be on early on in your investing journey is growth. Now, some ticker symbols you could start your research with. The ticker symbol is basically just the short form name of the investment. If you're in the US, you could look at something like VTI. This is the total US stock market. VXUS, which is international stock. BND, which are bonds. VNQ, which is a REIT ETF. And SCHD, which is a high dividend ETF. In Canada, I love our all-in-one option. So you could go with something like VEQT, XGRO, VGRO. You don't need a financial advisor to actually go and do any of this. You can do it on your own. Go and open up an account. If you're in Canada, I like Wealthsimple. If you are in the US, I would do something like Vanguard or Fidelity. Search the ticker symbol, choose how much you want to invest, and then set it up on automatic contribution so you start building wealth in the background. You can literally set this up in under 30 minutes, and if you want.
From index funds and ETFs to high-yielding savings accounts and robo-advisors, there's more beginner-friendly investment options than ever. The key is diversifying your portfolio, understanding the risk tolerance, and thinking long terms instead of chasing quick wins. Even small investment strategy today can build a serious wealth over time thanks to the compound interest.
Whoever told you that investing is hard is a liar. They're all liars. Like, if I had $1,000 to invest and I was new to investing and I wanted to put that money into something where I wouldn't have to think about it, this is exactly what I would invest into. Coming from a 24-year-old girl that has multiple six figures to invest in, I swear to God, if I can learn, so can you. For starters, you're obviously going to need a brokerage account. I have a couple different accounts. I use Charles Schwab for my retirement accounts, and then I use SoFi as like my main brokerage. I also use Robinhood. Just use whatever reliable platform that you want, because the part that most people get hung up on is what do you actually invest in. So I'm going to make this easier than probably anyone else has ever made it. What you're going to do is invest into ETFs. And an ETF is just like a fancy word for saying like a bundle of stocks. So instead of investing into like Apple and Microsoft and Tesla and like all those individual stocks, you can invest into an ETF that tracks a whole bunch of stocks like that. So it's a lot less risky. So here's 3 beginner friendly ETFs and how much money that I would put into each one. So starting off, number 1, VOO. This is going to be an ETF that tracks like the top 500 companies within the stock market. So it's like your foundation ETF. I would put 50% of whatever money you want to invest into here. So $500, let's say. Number 2 is QQQ. I would put 30% of my money, or $30 or $300 math, into QQQ. This is an ETF that tracks like the largest tech and innovation companies. It is a little bit riskier than VOO, but it does usually perform a little bit better than VOO too. Then lastly, number 3, I would put 20% or $200 into VXUS. So this tracks companies outside of the US. It is the slowest growth out of all 3, but it adds diversification. So if the US stock market like underperforms, you still have that. And that's literally it. Like, there's no reason to overcomplicate any part of it, and don't let anyone else overcomplicate it for you. Obviously, the more that you invest and the more that you learn, like, you'll become more knowledgeable and you can start to branch out and invest into individual stocks or crypto or whatever you want. But this is where I would start if I had to do it all over.
So if I had exactly 1,000 to start investing in the stock market, here's how I allocate it to these 5 ETFs as someone that prioritizes long-term investing in our 20s. Number 1, I'm going to put $450 towards VFB, which tracks the S&P 500. Then I'm going to put $250 towards VCN, which tracks the Canadian market. Then I'm going to put $100 towards VEE, which tracks the emerging markets. Then I'll put another $100 towards ZDM, which tracks developed markets except North America. Then I'm going to put the last $100 towards THNQ, which is an AI ETF. So that's how I'm going to allocate it. I'm going to keep on adding money regularly based on that.
This is how I would invest $1,000 in 2026 to build real wealth. At number 1, I would open up a brokerage account at E-Trade, Charles Schwab, Fidelity, basically anywhere that's easy and legit. Step number 2, I would split my money up like this: $300 into QQQM. This is your growth ETF that gives you exposure to all of the major tech companies in the US: Apple, Facebook, Microsoft, Nvidia, Amazon, so on and so forth. $300 into VXUS. This ETF gives you international exposure in case the US economy crashes. $200 into SCHD. This ETF is comprised of high quality US companies and it pays dividends, so you can start building some passive income for yourself. $100 into IBIT. This ETF tracks the price of Bitcoin, so you can get exposure to Bitcoin without having to manage passkeys, cold wallets, and crypto exchanges. And lastly, $100 into GLD, which is an ETF that tracks the price of gold. This is going to give you exposure to gold without you having to go and actually buy and hold physical gold bars. This combination of ETFs is going to give you growth, diversification, and a plan B for your money in case the US economy or the US dollar takes a plunge.
A lot of people tell you that investing is hard, and they're liars. They're lying to you because they are gatekeeping the true source of genuine wealth. So let me tell you, if I had $1,000 to invest, here's exactly where I would put it. And this is coming from a 24-year-old who is a multimillionaire. I became a multimillionaire in my 20s. I did not grow up with money. So here's exactly where I would put my $1,000 if I wanted to just put it somewhere and then not think about it for a little bit and let it just grow for me. The first thing that you are going to do is open up a brokerage account. I personally have a couple. I have Charles Schwab. That is where I keep my retirement accounts, aka my Roth IRAs. And you can literally use any single brokerage account. It does not matter. There's so many different options, and it does not matter. What's really important is what you are investing your money into. That's where people kind of get stuck and don't really know where to move forward and what to do. You need to be putting your money into ETFs. The first ETF that I would put my money into is VOO, and I would put about 50% of my capital, whatever I have to invest, in there. Why? Because it is the most secure. It is going to make sure that your money grows. The second ETF that I would put my money into is QQQ, and QQQ is a little bit more risky, but it's definitely still a super sound and safe investment. Just putting your money into the top technology stocks, and understand that technology is also a super large and fast growing industry in this world. At number 3, I would invest into VXUS, and this is basically an international stock tracker. And this is probably the slowest slowest growing one, but it gives you a chance to diversify your portfolio. Let's say like the US stocks are not doing too well and they're not performing and they're kind of down right now. You're investing into worldwide stocks, international stocks. And then at number 4, we have cryptocurrency. And understand that cryptocurrency is definitely way more risky, but also understand high risk means high reward. And cryptocurrency is one of those industries where only 1% of the entire world is involved into cryptocurrency. And understand that cryptocurrency is only going to keep going up and up and up. So getting into cryptocurrency and having some money in there is definitely a super safe bet. But yeah, that's literally it. Do not overcomplicate it for yourself. If anyone in this world is trying to overcomplicate it for you, do not let them. It is really not that difficult. It is this simple. Just pick a few ETFs, pick a few booming cryptocurrencies or cryptocurrencies that have like some traction in the news, and I promise you it's going to be okay. Me personally, I do trade cryptocurrency a lot. That is where I place all my bets and all my money. In order to double, triple, and quadruple my money, I do it through cryptocurrency, and then all those profits, I go ahead and put them into ETFs that I like.
Whether you are a first-timer investor or just looking to grow your savings, the best time to start investing is now. Hit subscription for more personal finances tips and smart investment strategies to help you build your wealth on any budget. We're going to have part 2 of this next Wednesday, so please put your notification bell on. Cheers. I'll see you in the next edit.